Good afternoon, everyone. Welcome to our webinar on a route to expanding into overseas markets. My name is Anna Christie. I'm the CEO at the Sussex Chamber of Commerce. So now I'd like to introduce you to our speaker this afternoon, Mike Foster from SPB Business Support. He's Managing Director. He's a chartered certified accountant and has worked with many SMEs and provided financial business advice to support the growth of their businesses. He has built his own trading company from the start up to sale, so he has personal experience of the journey. Please can you welcome Mike? Thank you.
Thank you very much, Anna, and thank you very much for everyone who's joining this. I'm going to we're going to go through a PowerPoint presentation which I'm going to share with everyone now. It's going to be a quick summary of all the relevant points we need to you may think is relevant, and following that, obviously, we'll open up for questions. So, as Anna said, we're at SPB. I'm a chartered certified accountant. I was in practice for 30 years, and in 2004, I took a small company I had called Aroma Home. And we built it into a worldwide brand selling well-being gifts to major retailers. We specifically opened a trading arm in the US. We were selling direct from the UK, but we opened up a trading arm in the US in 2007, which was a success. I'm pleased to say, and we finally sold the whole business, including the US arm, in 2017. So I'm going to go through basically a lot of what I learned in this process, having had actual experience of it, which was quite an eye-opening experience. Even as a chartered certified accountant, it was quite kind of a learning experience through the whole process. If we just go to the first slide, I had this created when I set up my business, as we give these sorts of talks on various different subjects, and the point of it is that wherever you are in your business cycle, this slide is relevant to you, and the point of it is really to focus on you taking your business from the light bulb moment, which is the creation of the business, through to nirvana, which is the cloud in the sky, and achieving your goal, which could be anything. It could be selling your company, it could be just trading it and having a very profitable business or family business or whatever. Basically, the point of the slide is to try and get over that the road is full of potholes and various you can be sidetracked all over the place as you go down it. And rather than rush into making decisions at every single junction, you need to be very careful and considered how you proceed, and how any decision you make will have a reaction to the end game. And if you are going to change direction totally, I wouldn't necessarily suggest it's not such a bad idea if you decide that your road is not going in the direction you want it to, then recreate your road, reset your goals, and go through the same process. So as you can see, as you process down this road, you could suddenly take a right turn downhill and to nowhere. And these little angels on the way are your guides, and I would really I'm very keen on people who are setting their own businesses up, who have expertise, who have a love for what they do. They're really passionate about their business, but they may not all have the expertise in every sector of the business. Basically, no one has. I certainly wasn't. I might be an accountant, but there's a lot more that I didn't know than I did know. And it's really critical to get advice at all the various junctions on the way, whether it be HR, legal, insurance, financial. And you mustn't, if you believe you know everything, you're going to make some big mistakes or get very lucky. And so I'd really impress upon you, the point of this slide again is to show you, rather than going down a road where you're going to get blown up, take some advice. It might keep you on the road. It might highlight areas that you might not have considered as you go down the path to reach your goal. And as you can see, you can end up in a maze of cloud and lightning and thunder and potholes and God knows what. You can end up going down a route that just takes you round and round, doesn't actually achieve anything. Or you can take a road that leads into the wilderness and really isn't where you're attempting to take your company, and is not going to achieve what you originally planned. And quite interestingly, this road here takes you down the international route, and the point of this was that the US, which is known as the graveyard to many British businesses for a lot of different reasons, is a very difficult international market to navigate, and you definitely need advice to get through that. And if you achieve all of that and you keep on the road, you end up in a well, I ended up this model is ending you up in a maze, and the maze is kind of the decision you have to make as to how you exit. This is an exit strategy, and that is a maze in itself, because there's loads of different routes through that. Again, you need expert help through it, and if you get it right, you come out the other end with a sale if that's your goal, and you end up in Nirvana. So as I say, it's just a sort of graphic description of the various mistakes and decisions that are not really mistakes, but without all the experience and the hindsight to make them, you do need to get experience and advice on the way. So that's that slide. Now, concentrating on the actual point of the webinar, which is moving on to the road into overseas expansion, into overseas markets. I'm going to go, there's about 7 or 8 slides here which identify many different things you need to take into account, and I'm trying not to focus on any one, because if I do, we could spend a lot of time on it, and at the expense of all the others. So some of these or all of these will be relevant to you if you're looking at you've got different models. You might be a service company, you might be a product company, and there's more issues than I've actually got down here, but I've tried to highlight the main ones that I consider you need to consider, you need to be aware of, and I hope it will give you an insight into maybe situations you haven't considered you need to think about, which will come along and block your route unless you've taken them into account. So here we're going to start off. Basically, there's a viability of the expansion and the delivery of it, and I would suggest you want to take as much time as you necessarily need to on the viability to answer all the what if questions that you may consider, because you don't want to get into a delivery situation without having considered all the possible issues you might have, because if you do that and you haven't taken into account all the problems you might encounter, you might misprice things, you might not have them costed, you might not be able to deliver, and from a business point of view, you might have a lot of costs and setup costs which you haven't thought of, which might actually impact on the viability of the project. So I would definitely suggest you take your time and seek advice at every junction. Okay, so I'm sorry, some of this is sort of there were more spaces floating around than appear to come out on this slide. So the first point you need to consider is your service or product currently in the overseas market that you're actually pitching to? If it is, it's quite good if it is, because in that case you do have you do have a reference in terms of pricing, in terms of how it's presented in the market it's in. You know, there's many different ways of getting. I had an issue with my gift company where a lot of my well-being gifts weren't sold into gift stores in Germany, for instance, because we didn't have such stores. All the products that I was manufacturing and selling went into pharmacies in Germany, and that was my market. So once I understood that, it was a different presentation, because I was presenting in Germany specifically to pharmacies, not to gift stores or major retailers. So you have to figure out exactly where your service or product is going to fit into the territory you're looking at, and make sure your model will fit that market. If you're not in the proposed territory you're looking at, you might ask why. I'm quite keen to attack markets where there is some opposition, because if there's other businesses in the same market as you, there's obviously a market for your product or service, and then you need to identify your USP, and how and why you can offer something better or slightly different, which will have a demand. Where you don't have any competition in your market, then you have to do your market research to ensure there will be a demand, and that's a whole different model, really. I would be concerned if you're pitching product into or services into a market where there's nothing like what you're offering in that territory. When you're doing this, you really need to do a lot of work on your pricing and cost analysis, because there's many different costs related to pitching into the overseas market than would be into the home market. In my specific case, when I was dealing with product, I had huge issues with my packaging, because I was dealing in foreign languages. So it wasn't just selling into retailers who could just buy my stock lines. It was a question of actually having to repackage everything, and therefore that was an issue of holding more stock, more packaging stock, and added cost. Where was I holding the stock? Was I going to hold it in the UK, or was I going to hold it in the EU or the US? Well, the US wasn't an issue, obviously, because they're English speaking, which is a big advantage. But certainly into Europe, you have a lot of different costs you need to consider coming into play, which may change your pricing model. And when it changes your pricing model, it changes the price you're charging your customer, whether it be B2B or B2C, in terms of the service or product you're supplying. And in that case, you've then got to have a good look as to what price you want for your product or service, and again, is that something that's gonna hold in the marketplace you're going into? So okay, so the whole pricing and costing of your offer into an overseas market is a whole new exercise for you. Don't assume you're just going to convert what you've got into the prevailing currency. You've got shipping issues, you've got packaging issues, you've got language issues, you've got import issues possibly. So you need to go away, redo your pricing and cost model for that territory. So that's the issue on pricing and costing. You need to go back to the beginning and start again, basically, and then and make sure you take into account all the costs. Okay. The next slide. Okay, so how are you going to actually get your product or service into the territory that you're aiming for? It's obviously easy in the UK. You can get in your car, you can go on a Zoom call, I suppose, into the territory and pitch your product. But there's different issues in pitching to overseas markets. And you need to identify how you're going to get to the market you want to get to, and certainly where you have less knowledge of that market. So, for instance, I knew when I could have gone to the pharmacy market in the UK with my product, which I did. I knew how to get there. I knew a lot of the pharmacy chains in the UK, so it was an easier route for me. If you're taking your service or product into, say, Germany or France or Italy or Europe as a whole, there's a lot of businesses that you're going to be pitching to who you won't have an idea who they are or how you're going to get to them. So you need to consider how you're going to do that. You can do it through agents. Obviously, you've got your own business contacts, or you can do it through distributors as regards product. Now, the whole issue of whether you're selling a product into a territory through an agent or through a distributor is a very important one to consider. And the major reason is that if you sell it through an agent, you will retain the IP, the value of that account, because you'll know who the account is. You're selling them direct, albeit through an agent. If you sell it through a distributor, you're going to supply a distributor with your service or product. They're going to buy it and they're going to sell it into the marketplace. You won't know where they're selling it, and you won't be able to control that. And that gives you a lot of issues, because you don't know they're selling it into the right retailers or supplying the right services, that the right businesses that match your service or product you're supplying, and they can ruin your brand if you're not careful or you don't work closely with them. The advantage of supplying through a distributor is that it's a one-off sale. So all you have to do is basically sell a container of product, for instance, into a French distributor or German distributor or European distributor, and it's easy. But the long-term effect of doing that and not having control on the retailers or the service providers you're selling into can have a detrimental effect on your brand. You have to think very carefully as to whether you're going to deal direct with the end user, be it B2B or B2C, or whether you're going to do it through someone who's going to act as an intermediary and will not necessarily share that information with you. Advantages both ways. Personally, I'm more into protecting my brand, and therefore I'm more interested in going directly to the end user, whoever that may be, than using an intermediary, or was, and it worked better for me as using agents than it did distributors. And then obviously once the world reopens, we've got the opportunity to do trade shows. Certainly in terms of product, I found these hugely useful, and I would advise anyone who's got a product with a view to expanding into Europe or the US, or in fact anywhere, to do a trade show first, because you learn so much from a trade show. You're meeting your end user, the business buying your product or your service, and you understand their barriers to market, their issues, and you also meet other people selling similar product or supplying similar services, and it enables you to mold exactly what your offering is, and you learn a lot about the marketplace you're selling into. So it's an investment, and quite often the investment into a trade show in the early stages of your launch into an overseas market will not prove particularly fruitful in terms of sales. However, it's a learning exercise, and it will definitely help you understand the market you're selling into. Obviously, language issues is a major problem, whether you're selling a service or a product. As I mentioned, the packaging issue is one that is something you're going to have to consider. If you're selling product, and if you're selling a service, it's the same thing really. Obviously, you've got to translate your service, whether it be your linguistic or whatever, into languages that you can sell you can liaise with your end user if you're dealing directly. Okay, so moving on. Okay, so once you're viable, you decided you're definitely going to do it, and you're now researching the market, and you might be in a position where you're accepting orders or dealing in the territory you're working in. And the question is, how are you going to do that? And what currencies are you going to work in? Well, my experience was that no one in an overseas territory wants to deal in any other currency than their own. However, there are obviously lots of overseas countries that you're not going to want to deal in their currency because they're not international currencies. So providing you deal in euros and dollars in addition to sterling, you probably that will be enough for anyone really. I personally wouldn't suggest dealing in many other things. If you're working in Australia, yeah, you might be under pressure to deal in Australian dollars, but in the main, try and stick to those three currencies. If your business is focused in Scandinavia and you're not going to move out of Scandinavia, then obviously you're dealing in the local currency there. But if you're looking at a more worldwide sort of expansion, then you're best off trying to stick to those three currencies because they all need managing. Now, when you sell into a currency into a country in any currency, you've got to deal with the currency fluctuations and the currency conversions. And therefore you need to price that accordingly, because you're not necessarily gonna, if you sell into the US and you're selling in dollars, then you might be quoting your customer at a dollar rate, which may be nothing like what the dollar rate will be when you actually want to convert back to sterling. So you have to take into account currency, and you have to become very aware of what the market is. The way I did it was I was dealing in product, and we had a big US business, and I was buying forward my dollars at a fixed price. So I knew I could convert at a rate at a flat rate. So I would buy $1 million. I wouldn't buy them, but basically I could convert my dollars into sterling, and I convert up to say $1 million into sterling at a fixed rate. And you don't actually buy the dollars. It's just a commitment that you have that accessibility. And to do that, you need to be working with your bank, or there are probably the way we did it was that there were specific large currency companies. Investec is an example, who are excellent for us, and they gave us a dollar facility so that we could safely trade in the US, and we knew what our conversion rate, because you don't need to gamble on conversion. You might win 1 year and lose the next 2 years. It's not, you're not in a gambling business. You need certainty in terms of your conversion. So conversion currencies is a major thing you need to consider when you're setting up and planning how or even quoting to your customer base. Sorry, I'm just I've covered quite a bit of this earlier in the fact that you need to consider all the additional costs that you need to take into account. So what your cost basis is in the UK will be nothing like your cost basis if you're shipping your product to an overseas country, because you obviously you've got a lot more costs in that connection. The alternative is to ship FOB, which passes the cost onto your customer, but you need to draw up a revised costing and pricing model when you're dealing with an overseas in an overseas market. Other things you need to be aware of are insurance. So if you're selling product, for instance, you've got issues on returns. You may have insurance, personal liability insurance. If it's a product people could damn. I mean, in our case, we were selling lavender filled wheat bags, if you like, was one of our products. So we had to be aware that we needed insurance in the various territory, just in case someone overheated a wheat bag and it caused damage. It was just an example. So you need to look at your insurance company, where you're insuring anything to do with your product. Your insurance company needs to be aware of your overseas business, and you need to take into account before supplying. I think the biggest issue we had throughout the world was the compliance legislation. It's going to get more and more difficult with Brexit. There's no doubt about that, and you need to make sure you comply. So if you jump through all hoops in the UK in terms of compliance. You can bet your life that wherever you go in the world, there'll be different rules and regulations. You need to be aware of them, because your product will be pulled off the shelf in an instant if you don't comply. So you need to investigate that. There are companies that do that for you. If you can't do it yourself, your best bet, if you can, in terms of product, the way we did it was that we bought our competition and we saw what their labeling was, and we kind of matched that in terms of compliance. So if you had to mention the country of manufacture, for instance, where some countries demanded, some didn't, we would include that in our on our packaging where necessary. And so we found a cheap way of doing it, actually, because we just our compliance met our competitors' compliance, so we figured that would do. So that's compliance legislation, and how you trade in other countries legally is something that again is fraught with danger, and you need to be very careful about. Okay. I could speak for about 2 hours on this, really. It's not something I really want to focus on case for case today, because you could ask me 20 different questions on it and miss the rest of the points I'm making. But naturally, Brexit is going to have a huge effect, both in the short term and long term. Many questions unanswered as yet, so it's a bit of a minefield as we speak. But you need professional guidance exactly how you're going to trade, and how you're going to account for that in the UK with your overseas customers, and how they're going to account for it. If you charge it, can they claim it? Can they reclaim it, or can they not? As I say, it's a minefield at the minute, and I would be flagging anyone who's about to enter an overseas European market to take professional guidance, as I would on much of what I've spoken about today. So there's some points we've covered here, but I'm just going to quickly run through them. Research your market and your competitors, we've dealt with that. Depending on whether you're a B2B service provider, whether you're any of B2B, B2B or B2C product or service provider, it's the same process. Consider your pricing model. I've reiterated that on numerous occasions. Languages, yes, huge barrier in terms of how you present your service and actually how you engage with your customers. We just, as an example, we were distributing through our company a major US candle brand, and our distribution included France. So that created us issues in terms of our packaging, which had to be amended, and it also created huge problems in us dealing with our customer base, because many of the French don't want to speak English. So we had to provide. So if they had a query on their order, we had agents, but we were managing the account, and therefore we had to provide a situation where they could liaise with our office and speak French. So it might seem obvious, but it did create huge problems until we overcame it. Yeah, compliance is also a huge issue, which I've just covered. Currency we've spoken about. Research local laws kind of comes under compliance, and the importance of communicating in a foreign language, which I've just mentioned. Moving on, I would say probably 7 out of 10 inquiries I get into trading overseas is businesses that want to trade in the US. It's quite understandable. We've got 330 million English-speaking people in the US, 5 times the size of the population over here. We're getting on for 6, I think. And it would seem an easy market to break into. And I would say that it's the most difficult market out of all the markets I traded in. They've got a totally different mindset. The major key accounts, we dealt with major accounts, Macy's and Bed Bath Beyond, and it was very, very difficult to understand the psyche of how they traded and how they didn't respect their suppliers. So there's a lot of in the UK we're spoiled really in the fact that we have a good relationship with our customer base in the main, but in the US it's really the Wild West, and it's a case of how they can charge you back, not accept goods if they have any reason to think they can't sell them. It's a massive issue trading in the US. It might seem a panacea because they speak English, but it certainly isn't. We were successful over there, but as I showed you in that slide at the beginning, majority of companies don't succeed in the US for that reason, and also for the fact that the pricing in the US is pound for dollar. So if you have a product, as an example, that sells for £20 in the UK, it will sell for $20 in the US, in around that number. So basically, you're now retailing a product in the US at a discount to the UK, because even at 130, it works out at £16 or something for the same product, and you've got to get it there. So the pricing in the US, as in what retailers expect to retail a product for, compared to the same retailer in the UK, is 30-40% less, and you've got to be aware of that. In my case, I went to the New York gift show right at the beginning of my sojourn into the US, and I learned that lesson. And at the end of it, we had 2,000 independent accounts in the US, and we were dealing with 7 or 8 major retailers, but it wasn't without going through quite a bit of pain on the way. But it was very rewarding, obviously, because it's such a big market. So if you crack the US, and in fact, we sold our company. Primarily, our UK and worldwide business was bigger than that, or as big as our US business. But the attraction to the person who bought our business was we had a big US presence, and they felt they could tap into that and work that more than they could work the UK and other worldwide territories. So I've got personal experience of worldwide trading and US trading, but the US was we set up a different company, and it was really a whole different exercise. Okay. Finally, which I usually start with this slide, but it's kind of slipped to the end. You need to be aware that when you expand into any market, you're going to need additional capital to do so, because you're going to need more stock, you're going to need more resource. So it's just not a pricing model where you say, well, okay, this is what it's costing us, this is what we're going to sell it for. You've got a lot of other costs to take into account. You might have to hold more stock. You might have to invest just in traveling to trade shows, meeting customers. So you need to be aware of the setup costs involved in that, and you need to cost that into your model. How you set up in overseas is an interesting one, because you could, in our case, we felt, and we revised it, and I'm glad I did. We set up an LLC, a separate limited company in the US to trade. I didn't really want my UK business or my worldwide business affected by anyone overheating a wheat bag in the US and blowing up with their house and us getting sued. They're very litigious in the US. And I wanted to ring fence my US business. I wasn't there on a day-to-day basis, and therefore I really didn't want to confuse it with anything else I was doing. So it made sense, and different territories you might have the same view on, but you need to consider that. In what circumstances might you want to open up a subsidiary in a different territory? Again, it's a case-by-case scenario, and you need to look at the market you're looking to go into and look at the benefits. The downside on setting up subsidiaries is you've got to manage them, you've got to file in that territory, you've got to appoint accountants and solicitors in that territory to do that. So there's a negative to setting up independent businesses, but you have to weigh the negatives against the positives. To do all that, you need, and it's something that I usually start with, is the importance of your profit forecast, your cash flow forecast, and your balance sheet forecast to make sure your business is viable. And I'm forever preaching in any discussion on anything we do is the importance of you forecasting, your forecast being converted into these 3 documents. And whilst you should be able to forecast quite accurately for your first year or two, don't be frightened to forecast out. Although you're not going to, there's one thing that's certain, you're not going to hit your forecast, but it helps with your road to financial success, because it gives you your goals, it gives you some milestones that you're attempting to hit along the way. So you have to accept you're not going to hit your forecast, but it does help focus your mind. And then the final point is look forward, not look back. Historical figures are very helpful in helping you forecast the future, because you can use them as a guide to what you've done in the past, but hopefully you'll do things better as you move forward. You make improvements, and you don't necessarily need to just grade up your historical figures to your future forecasts. Just adding 10% to your turnover because that's how your turnover has grown over the last 5 years may or may not be a relevant way of working out how you intend to grow. Certainly with the situation we find ourselves in, where everyone's having to recalibrate their business, the historical figures have I wouldn't say have little importance, but they have less importance now than they ever would have done, because it's a whole new situation in view of the pandemic and whatever. So I'd be advising everyone to redo your forecast, throw your previous model out the window to some extent, other than using it for guidance if there are areas that are relevant. But your forecasting is absolutely key to any business at any time, especially if you're expanding it. Okay, that's as quick as I could do that, and I hope I haven't glossed over a lot of things that people wanted more information on. But I've tried to cover as many things as I can in the time I've got, and obviously we've got 15 minutes, I think, available to deal with any specific questions anyone's got.
Thank you very much, Mike. It was interesting what you were saying about the American market. It was interesting what you were saying about the American market, because I suppose people will automatically assume that, you can, because it's a English-speaking country, that it's easy to trade there, but there could be, whether it's compliance, regulatory, tax issues, and just getting into the market. So, yeah, I was quite interested what you were saying about America in itself.
Yeah, having done it, and successfully done it, it's it was a very steep learning curve to get it right, and I'd advise anyone to make sure they get the right advice if they're going to do it, because it's full of it's a minefield. It really is.
Yeah.
With the way they would do it.
I have put some information on the chat as you were talking, because it actually prompted me to put some information about we are looking at helping businesses expand into overseas markets. So that's potentially looking at some trade shows. So we are working with some other chambers and everything, and hopefully we'll be able to look at that from next year. We do work with numerous translation and language companies, one of which is logged into this webinar today. So it's using that membership, because there's lots of members that can provide that support that's needed. And we also work with the likes of Money Corp, who can provide the foreign exchange, preferential rates compared to some of the banks. They work closely with the banks and everything, but they do provide preferential rates for members. I've also put a link there to the Brexit guidance dashboard. There are some questions that remain unanswered, which we're pushing and lobbying with government in terms of trade, but it's not just for those that are importing, exporting. It does impact GDPR, data, people, taxes, regulation in terms of labelling. So I have put that on the link, and also customs declarations, which will be a requirement for EU countries. So we have just recruited and about to appoint 3 new members of staff that are going to join us. They're going to be fully trained, and this is something that the national network's doing, so that we can help support businesses in terms of the new documents that are required for importing and exporting. So I just thought I'd mention that because I was putting that in the chat as you were talking. And I haven't seen any questions in the Q&A, but I'd like to invite anybody from the audience to see if they have any questions they'd specifically like to ask Mike, or if they've got any questions in terms of the information I've put on the chat. You'll have to unmute yourself, or if you've got any questions. Can't see any questions coming through. I think it's just all to do with, like you say, at the moment there are challenges with the EU in terms of that market, because there's a lot of unknown whether there's going to be a deal, no deal, what the documents will look like. So we have got some training courses. There is some funding as well from HMRC to help businesses look at the training so that they can train to understand some of the documentation. But
I mean, that the issue you mentioned about the US, obviously I could talk for a long time on that, and on everything, that all the compliance that you need to have in place to be able to supply. One of the things that you need to do, just as an example, is that you can't supply product into the US without the company you're supplying being named on your insurance policy. That's just the way they are. And I had I'm a startup. I'm part of the Virgin Startup mentoring community, and I've got a company on Virgin Startup who are supplying a hair care brand they've developed into the US, and they were about to sell it in, and they got asked this question, and they couldn't. Their insurance company won't. In the UK, we don't do that. We won't make a customer a party to an insurance company, but in the US they do it all the time. So you can't have UK insurance. So even if you're supplying out the UK, you need a totally different policy so that the retailer in the US is insured for your product, because they're selling it. If the hair care, if someone's hair falls out, they don't want to get sued. So they want to hook into the supplier's policy, and the only way to do that is take out a new policy. So, and that's probably, you wouldn't think that you'd have to do that. You've got, you get your public liability insurance, and that's it.
I have got a question that's come in. Now it says, which non-English speaking market did you find the most difficult in Europe and Asia? And I know, having lived in Asia, I know how challenging entering those markets can be, but I'll open that up to you, Mike.
Yeah, the biggest problem I had was in China, because, well, I wouldn't like to say they're not to be trusted, but it's very, very difficult to get. It's impossible to manage that, because it's legally very impossible. It's almost impossible to enforce anything. They know that, and if you're supplying certainly into a third world country, well, China's not, I don't know whether China will be classed as one, but I found China almost a very dangerous country to supply. But I think I had issues everywhere. Dealing with the French, they wouldn't speak English, so it was, I had to deal with the language issue with them, and Italy and France were very difficult to get paid through. You had to be very careful. You need to do your due diligence in terms of the companies you're dealing with to make sure that you weren't supplying product or services, and then they wouldn't pay you, and then you've got to. It's a very long-winded process to take them to the European courts or French courts. We had the terms of trade we worked with was to have all legal disputes dealt with through the UK courts, but that didn't help us because we had to enforce in France. So we would get judgment on a French company, and then we still haven't got our money. We've then got to try and enforce through a French collection agency. So I found collections certainly in France and Italy were the most challenging. The China, in terms of just general trust, was very difficult. Germany and Spain, I felt a lot more straightforward with. Germany was not difficult to deal with. Scandinavia was very straightforward. It was like dealing in the UK, very trustworthy. It was a smaller market, so it wasn't probably such a headache because of that. Was one of the reasons.
I know of one vineyard, supply wine, who wanted to enter, based in Sussex. They wanted to enter the Indian market, and it took them 6 years before they could do that because of the logistics and the legalities. There was lots of complications in terms of entering that particular market.
Yeah, there is in every market. There's a compliance challenge.
Yeah.
Some are easier than others, and the worst one is US by a mile. Worse than China. Most Asian markets didn't seem to have we didn't have a major issue with compliance because they weren't as far forward as us and Europe in terms of putting in the rules and regulations to tighten it up. So I didn't, dealing with India and Mexico, and we and it wasn't such an issue, but there are other issues in terms of getting your product there in our case. And making sure you got paid. That was the biggest one. Most of the overseas business we did, not in the US, not in France actually, but anything out of Europe and the US was all, we had to be paid up front.
And also just picking up one of your comments earlier about the language issues, and I would definitely agree that it's making sure that businesses have any legal contracts professionally translated, that they do get them professionally translated so that they understand the full legalities of what they're signing into, not using Google Translate or anything like that, but they do get them professionally translated so it's in your own language right before you sign into anything.
Yeah, definitely. One of the issues we had also was the finance, because we were invoice discounting as a way of speeding up our payments, and it's not possible to. You've got to be very careful when you invoice discounting, because your invoice discount will only allow a certain percentage of business to be outside the UK, and they won't invoice discount businesses. A lot of business we did outside of Europe. So it's just not a question of just selling something into a territory and funding it in the normal process. In a lot of cases, we had to be paid up front because we weren't going to wait. We didn't want to have to collect in some backwater somewhere, but we couldn't fund it anyway. So we could fund it internally, but we couldn't fund it through our invoice discounting arm. So most invoice discounters don't like dealing outside the UK. So that's also another challenge, to make sure you can manage your cash flow in terms of the territory that you're pitching into.
Yeah, we do have, for those that have joined us today, we do have a number of international trade training courses that can help you understanding things like tariffs, commodity codes, also the differences in terms of using agents and distributors, and just going back to that point that you made at the beginning, Mike, in terms of, protecting your brand, whether you use an agent or you've got no control of that and you use a distributor. So we do provide some further training courses that really go into in-depth understanding of the differences and the benefits as well, because there are benefits to both. It depends what you want to do as a business and an organisation, and how you want to get your service or your goods to market.
Absolutely. I mean, I'm not a great favourite of distributors because you lose control on your brand and your product, and if they sell it into the wrong market, they can do a lot of damage to your brand. But it is a shortcut, that's for sure. You have to discount it. In our case, you're giving a wholesaler, a distributor, around about 40% discount compared to a standard wholesaler. So if I'm selling into a retailer in France, I might be charging, I don't know, 10 euros for the product. If I sell into a distributor in France, I've got to sell it in at 6 euros so that they can make their margin when they sell it to the retailer.
Yeah.
So it does. You lose. Certainly, you have to take a cut on margin. You lose control of your brand, and the benefit is that you speed the accessibility into that marketplace, so that a distributor will be able to distribute your product into the market a lot quicker than you will, because they know the market. So in some territories, we used it as a quick fix to get into the market, then came out of it. So, and by that time, our brand is now in the marketplace. And we then came out of the distribution, and we had to then sort of scramble around to try and figure out where our product was in the marketplace to deal direct. But a lot of people came back to us when they realised the distributor didn't have stock. But then what we found, the part of that negative was, as I say, we didn't like some of the retailers our product was positioned in. So I'm not a great lover of that's about the only great advantage. It does get you into a marketplace quickly. But personally, from my experience, it wouldn't be something, unless there's a good other reason, it wasn't something in my business.
I have one final comment that's been made here in the chat from Claire, and she said that the main challenge they faced is the difference in admin procedures between countries, but they've managed to solve that with the help of their accountants.
Yeah, exactly. As you say, from that little image I've got on slide 2, you need to seek advice at all times, at every junction. Get professional advice, and if you do that, you just limit the risk. Basically, you're never going to de-risk totally. But the issue you've got is that when you're planning to go into a territory, you need to understand that, and you need to get the advice before you're in the territory, because otherwise you're in there and then you've learned something you weren't aware of, and you're going to incur extra thousands of pounds worth of cost to put in place whatever you need to comply. So I would suggest doing all that groundwork before you kind of make that leap of faith into a territory.
Definitely. So lots of excellent advice there from Mike in terms of the research that you need to do, speaking to experts, whether that's your accountant, having your forecast, your cash flow, your budgets, and really doing that research before. So
anyone who wants any assistance can obviously contact me through my website, and I'm available to provide the same service in respect of all the sites that I've listed.
Thank you so much, Mike, for joining us today. Thank you to the delegates that have joined us. And if you've got any questions, as Mike said, please do approach Mike directly, so he can help provide further guidance in terms of what you need to do. Thank you very much for joining us.